The company behind the USDC stablecoin, Circle, was recently listed on the New York Stock Exchange under the ticker CRCL. It's no exaggeration to say this was one of the most talked about IPOs in the first half of 2025. The stock was initially priced at $31, opened at $69 on the first day, and soared as high as $103 during intraday trading, eventually hovering around the $100 mark. That's a 160% plus gain in a single day, drawing major attention from both institutional and retail investors. With over $1 billion raised through the IPO, this debut is being seen as a symbolic moment. Traditional finance is finally taking crypto infrastructure seriously. Circle Internet Financial is a company behind USDC, USD coin, like I said, which is a stable coin or digital asset designed to maintain a 1-to-1 peg with the US dollar. In simple terms, one USDC is always meant to be worth exactly $1. Unlike Bitcoin, USDC isn't for speculation. It's mostly used for payments, transfers, and on-chain financial activity. Today, USDC is the second largest stablecoin globally, trailing behind Tether USDT. But USDC is often favored by financial institutions and developers because it's considered more transparent and compliant with regulation. Circle's business model is surprisingly straightforward. For every USDC in circulation, Circle holds an equivalent amount in US Treasuries or similar reserve assets, which earn interest. The more USDC in use, the more reserves, and the more interest income Circle can generate. Circle's first day of trading surpassed nearly everyone's expectations. The stock doubled its IPO price and continued to gain ground, immediately cementing itself as one of the hottest tech finance listings in recent memory. What really raised eyebrows was the level of institutional participation. ARK Invest, led by Cathie Wood, reportedly purchased over 4 million shares of CRCL on day one, spreading them across several ETFs, including ARKK. Heavyweights like BlackRock and Fidelity also joined in. Now, that kind of backing suggests that crypto-native companies like Circle are no longer being sidelined as fringe tech. They're now being treated as part of the future of financial infrastructure. To evaluate CRCL as an investment, it's important to understand how Circle earns revenue. In 2024, the company generated $1.7 billion in revenue, and remarkably, 98% of it came from interest income. In other words, Circle earns money by collecting interest on the reserves it holds to back USDC. Most of those reserves are invested in short-term U.S. Treasury securities or money market funds. With interest rates currently high, Circle is benefiting from a very favorable macro environment. But there's a catch. Circle is highly exposed to the Federal Reserve's rate policy. With rate cuts expected in the second half of this year, 2025, Circle's earnings could shrink significantly. Analysts estimate that even a 0.25% rate cut could reduce Circle's annual revenue by around $100 million. Adding to that, 60% of the interest income is shared with partners like Coinbase. That means Circle's profit margins aren't especially high, despite the large top-line revenue. Now, Circle CEO Jeremy Allaire has been outspoken about the company's direction following the IPO. His vision goes beyond simply issuing a stablecoin. He wants Circle to help rebuild the global financial system on top of internet-native rails, eliminating delays in bank transfers, reducing international fees, and replacing middlemen with instant digital settlements. To that end, Circle recently launched the Circle Payments Network, which is a global clearing system that uses USDC for real-time settlements. If successful, this could transform Circle from a digital dollar issuer into a core payments infrastructure provider for the internet age. Now, Circle's IPO is significant in more ways than one. It marks a shift in sentiment from traditional financial institutions that were previously skeptical of crypto companies. The numbers speak volumes. In 2020, Circle's annual revenue was only $15 million. Fast forward to 2024, and it hit $1.7 billion. That kind of growth is rare, even in Silicon Valley venture circles. Adding to the optimism is a Genius Act, which is a bipartisan bill gaining momentum in Congress that would regulate stablecoins like USDC. If this passed, it would further legitimize Circle's business and open up opportunities in the regulated financial ecosystem. Still, despite the excitement, there are real risks that investors need to consider. First, Circle's business model is highly concentrated. Nearly all of its revenue depends on interest income, making it extremely sensitive to interest rate cuts. Second, USDC is losing market share. Although it remains a key stablecoin, it currently trails USDT by a wide margin, especially in Asian markets where Tether dominates. Lastly, because Circle shares a significant portion of its earnings with distribution partners, it faces pressure to expand into other revenue lines. Without diversification, future growth could stall, especially if interest income declines. Now, CRCL may look like a high-flying crypto stock, but it's actually built on a real profitable business. It's backed by major investors and poised to benefit from regulatory tailwinds. So it stands out from typical crypto hype names. That said, though, its reliance on one income stream, which is interest on USDC reserves, means it's vulnerable to macroeconomic shifts, especially falling interest rates. So if you're optimistic about the future of stablecoins and believe Circle can play a leading role in digital payments infrastructure, CRCL could be a compelling long-term bet. But if you're concerned about the rate cuts, market share, or lack of business diversification, caution is warranted. So above all, remember that newly public companies that surge out of the gates often come with high volatility, so investors should weigh both upside potential and downside risk carefully, right? As traditional finance and digital assets begin to converge, Circle may be one of the key players leading that transformation. So what do you think? Is Circle the real deal or just the next hype cycle in disguise? Please share your opinions by writing in the comment section. And if you haven't already, subscribe to my channel, hit the like button, hit the notification bell, and receive updates about interesting stocks lately. Peace, love. Bye-bye.